All right, well, welcome folks to today's Blackfin webinar. We're going to be talking about the three biggest mistakes that lenders make when selecting technology. I really wish there was an easy answer to this. I wish there was a silver bullet to the answering this question, but unfortunately, there isn't. It's a very hot topic with so many interesting trends that are actually taking place in the mortgage banking and servicing space. So this should be a fun-filled conversation. This is not a deep fake. There's no AI magic here. This is real people talking about a real challenge in our industry about selecting technology. So I do want us to recognize that this is a sensitive topic and a sensitive discussion. So looking forward to really getting into this. But I'd first like to recognize our sponsors. Oh, and look, a shameless sponsor, shameless plug for Blackfin Group, the industry's best resource for pretty much everything and anything as it relates to anything that you're needing as a mortgage lender in the space. We have an amazing all-star cast of consultants on our team, helping with business strategy, helping with technology selection. This is why this topic is so near and dear to our heart. M&A, a lot of firms are trying to figure out where do I find another $500,000 to $1 million in revenue. We're able to do that through our secondary optimization consulting, our products, helping lenders get agency approval so they can pick up a little more margin there. So our consulting team is just tremendous. Our marketing services is great. Our data labs, we have fun helping lenders with some critical industry insight reports. Our Blackfin University just launched management and leadership programs, webinars, and workshops. Really excited about the offerings that we have there to help level up our leadership and employees and staff through a lot of these different programs. Last but not least, and most importantly, Cecilia Jansen, our Chief Delivery Officer, runs our delivery and pro services, where we're helping lenders with technology implementation, project management, QA testing, setup, and administration services for Encompass and different systems, helping with integrations, custom development. We have a whole app dev team on that side. So we love that we're able to help lenders and support their success in a lot of different ways. So again, shameless plug, but hey, I'm pretty proud of what we've built here at Blackfin and all the great team members that we have. So I'd also like to recognize Blackfin's Tech Stack Navigator preferred partners. Simple Nexus, Constellation, Flowify, LenderBlocks, Mortgage Flex just leveled up and became a premium partner of Blackfin, and LoanPass. I got to tell you, LoanPass is doing some really exciting things with their platform. Bill Mitchell, Mike Lewis, just great partners with them. Product and pricing engine that they're bringing to the market, and I know they just launched with their integration with Encompass. So look on the horizon for things that are happening at LoanPass. Very excited. Lenders, Blackfin's Tech Stack Navigator, for those lenders that are on the call, this really is a selection service that's designed to help remove the lender's consulting costs. Right now, this was a project that I had inspired our team to kind of come up with a solution about a year ago. The RFPs become useless. 80% of the 300 to 400 questions that you're asked, 80% of them are answered by the vendor as yes, we do that. We couldn't do it if we couldn't do business in the mortgage business if we didn't do that. So we really help alleviate a lot of that headache in the RFP process through our Tech Stack Navigator services. Help clients more efficiently and effectively make a intelligent investment decision regarding their technology. So really excited about Tech Stack Navigator and what's doing for lenders or vendors. Tech Stack Navigator, if you're preferred partners, we're really recognizing and making sure that your platform is recognized and understood by lenders that we consult on in every engagement that we're a part of, so that we're not a reseller of any technology or any software or platform, but we make sure that our preferred partners and their platforms are really understood about the value proposition of what they're doing for lenders nationwide. So again, another shameless plug around Blackfin, but big kudos to our preferred partners. And hot off the press, I got to announce, I'm very excited. Cloud Verga is a premium partner. They just signed up. We did that last night. Really excited about what Maria is doing at Cloud Verga and the exciting enhancements that they're making to their platforms. We look forward to helping educate the rest of the industry as it relates to those things as well. So with that said, let's get into introducing our guests. Got a little bit of a setup here, and then we'll really get into the questions. So I think all this is important to give a little bit of perspective. But first, our very special guest is Dan Goldman. Dan is the head of sales at Flowify. Flowify is a preferred partner of Blackfin's Tech Stack Navigator. As a preferred partner, Dan, our team's really, Andrew, and you've really gotten in deep around all the different capabilities and features, functionality of what Flowify is doing. Really excited about some of the other updates that you guys are going to be making here very shortly as it relates to your platform. So very exciting things with Flowify. But Dan, you and I, we've been collaborating in the industry since I think back in your executive days at Aurora Loan Services. So we go back a few years, but it's really great to have you on today and get your perspective as well when it comes from a active vendor in the mortgage banking space and what are some of the challenges in selecting technology and you're helping lenders in that process, some of your best practices. So welcome, Dan. Happy to have you.
Thanks, Keith.
Yep. Next, our very special guest is Chuck Iverson. Chuck is the president of Mason Mac Mortgage out of the Bay Area. Chuck, you and I, all over the country, we keep bumping into each other at conferences in New York to San Diego to Vegas and everywhere else in between. Always talking technology, business trends going on in mortgage banking. Always great collaborating with you and just brainstorming in different ways to how to solve things, how to solve some of the big challenges we have in our industry. So really extremely valuable to have you on today with your perspective as a mortgage lender, as a president of a company. So welcome, Chuck. Happy to have you.
I'm happy to be here. Thank you for the opportunity.
Yeah. Last but not least, we also have my well-respected colleague on the team, Andrew Weiss. Andrew is partner of our mortgage technology consulting practice, where little known fact about Andrew is that Andrew helped design, build, and launch a little known technology called DU back in the day. So Andrew's been consulting lenders on mortgage technology for the last 20 plus years. He's worked with alongside industry titans like Len Ticky for half a decade, advising lenders on technology. Really understands all sides of the business and the technology side of requirements and needs and what's really a great fit. And that's why he runs our Tech Stack Navigator. And just as service, just as Cecilia on our team said, it's a great matchmaking process with Tech Stack Navigator. But because of Andrew's long-term tenure in mortgage tech, he's able to help give folks the insights baseball. I guess that's a fitting today's opening day, right? So gives the inside baseball and technology with community banks, credit unions, and advises on all sides of it with independent mortgage bankers. But Andrew, another great veteran to have on this call. We're excited to have you, man. Good to thanks for your time.
Well, thank you, Keith. I appreciate it, and I'm very glad to be here.
Absolutely. Okay, before we get into some of the dirty little secrets about technology selection, I want to take just an extra minute to actually set this whole conversation up so that we're all on the same page, we're all a little bit empathetic, and we're all operating from the same mindset when it comes to selecting mortgage technology. I think we all need to remember selecting technology is no easy task, primarily because, unlike any other industry, one single U.S. mortgage loan transaction requires this largest data set that's required to complete a transaction in the world. So think about that for just a minute, if you would. It's harder to produce a U.S. mortgage loan for $150,000 than it is to produce a $1.5 million commercial loan. A lot more moving parts, compliance issues, we got regulatory issues, all the regulatory bodies overseeing all the data and transactions, security risks, etc. So I don't need to go through all of it, but I again, helping be empathetic to the challenge of selecting new technology. We also need to keep in mind that selecting and then having to implement this technology is why C-level executives have said to me over the last 20 years, Keith, this project is like a horror show. Where I've heard comments like, Keith, I think I've only got one or two more of these projects left in me. I mean, it's not easy. Or the last comment that I commonly hear is, I don't know that I can handle another project failure. Selecting and implementing technology is a very sensitive discussion. And my other point here in the setup would be, understand that over 70% of the industry-wide technology projects fail. And it's because of these reasons, it's hard what we do in technology, selecting and then implementing technology. Honestly, that was what inspired me to start Blackfin, was making sure clients are always in the 30% that succeed, that you're optimizing your technology, that you're optimizing your business operations. There's so many moving parts there. So, we've saved a lot of implementations from being flat failures. We've been able to help a lot of implementations go smoothly right on the outset. But we have that firsthand knowledge, and obviously Andrew does as well. But hey, the last point that I'd make to level set here is, I know that we have a wide cross section of different folks on the call today, vendors, lenders, even consultants who are hoping to tap into some of the insights today. It doesn't matter who you are. We're just happy to be the givers. Be the givers of good wisdom and information to help our industry make better decisions around technology selection. All right, so that's it with the setup. We're good to go there. Dan, Chuck, Andrew, let's jump in. Let me ask a question. Everybody keeps asking themselves, but they struggle to even answer them themselves. I mean, it's a challenge answering this question, but technology expenses continue to increase as a part of the total cost to originate a mortgage. Now, a lot of that cost gets passed on to consumers, which I would debate whether that's really the right answer. But is it worth it to keep buying these technologies? Are there particular technology expenditures that have a higher, more positive impact than other technologies? Can technology really drive costs down? Or is that just hype? Is it that people are just being sold hype that they're going to drive their costs down? And we've created this whole economic windfall in software firms. I mean, these are honestly, little questions that we hear on a regular basis. So is driving down lender costs really what a lender should be focused on? I mean, these are just some of the questions. But Chuck, I know I just asked a boatload of questions in the first question, but Chuck, why don't you start us off? Because as the president of Mortgage Mac, mortgage lender, Mason Mac, I'm sure you struggle with the same questions when it comes to your own investments in technology. So yeah. You want to start us off, Chuck?
Yeah, I'd be happy to, and thank you for that. And as a lender, this is one of the most challenging situations that you face. And if you kind of step back a little bit, you're getting pitched all the time, right, on all kinds of different things, and you have kind of different buckets of technology. Some is necessary to keep your franchise, like you have to have an LOS, right? Some of it's more optional, and of the optionality of it, there's two intended benefits. One would be either cost reductions, efficiency, ease of use. The second would be revenue generation. And so, you have to discern those benefits. And then, I'll just kind of set the stage. Most of my comments through this is going to be around what a lender has to commit to, because it doesn't happen on its own. You have to commit to being a good partner and really understand the necessary commitment to create change in your organization as well too. So when it comes to the selection, that's really the most important part of the whole thing, and it's so hard to kind of discern, so at the top level of it, you can say yes and regret it. So, and I've been accused of chasing shiny objects and, getting enamored with ideas and things like that. Or you can just, become very kind of jaded and say no to everything. And then you feel like you're not evolving your franchise. Right. And so, And then, as I said, you're getting pitched a lot. So there's an inherent bias, obviously, in vendors. Their job is to sell what they have. You hope it's truthful, and you hope that it's, fact-based, but you have to do your homework and really think through the entire benefit chain that you're looking for. So, in some cases, I would say most lenders already have their necessary technology in place. So if it's one of those necessary pieces, then it's a replace question. And, from there, it's kind of like, wow, what's the cost of that change? Not just in dollars, but to process change, bandwidth, other opportunities that you're going to have to say no to get that going. So there has to be a really, really strong benefit there. And then, is it going to be easier, faster, simpler to use? Is it going to make me more efficient? And what will it take for me to make that happen, right? There's the hypothetical benefits that are out there, but you have to be committed to do what's necessary, behavior changes and potentially people changes to get the hypothetical cases to work. Like, every loan officer is going to get one more loan, Keith, hypothetically, right?
Yeah.
Right. And so, those are the things there, or will it save me money? And what would I have to do to optimize that without an increase in business? Because the other pitch that you hear is like, this will save you money. As your business grows, you will get, well, you can't count on your business growing in this business, right? So you have to look at it. Will it save me money without an increase in business? So
right,
a little bit
That's
of
exactly. And that change management aspect is one of the most challenging, right? I mean, getting people to be able to adopt the technology. So your game plan has to be tight there, because project management team loves taking on the project and, hey, we'll get this implemented, but then what are we doing to make sure that the outcome of this project is achieved, that we are improving, whether increasing cost or increasing production or reducing cost, right? Are we achieving that outcome? It's a really good point, Chuck.
It's fun to have the party. It's not as much fun to clean it up afterwards.
That's right. Amen to that. You've seen a few of those. Well, those are really good, valuable points, Chuck. Thank you. Dan, you've been on both the lender and the vendor side. So how do you answer this question for your clients when they're asking you, when you're going up against a Chuck and Chuck's going, listen, I can't move to every shiny new object. I mean, how do you answer that question about the value proposition? And are you really, tackling that question of, the shiny new object and really the ROI that can be achieved and backing into how that ROI is explained?
Yeah, great question. And Chuck, some great points that you brought up. And, I'll go with this statistic. 67% of all millennials and Gen Zers expect a digital mortgage experience. So think about that. That do I have, as, Chuck or any mortgage company out there, do I have that digital mortgage experience in place as we move forward? So I think that's first and foremost one of the things I have to look at. And Chuck mentioned replacement versus, chasing the shiny new object. In this day and age, most mortgage companies, it's probably going to be a replacement. They have some solution, but I think Keith, your original question was also around cost. And I think that you have to look at where are your costs today, and some of your biggest costs are obviously on the credit front. Some of your biggest costs are on the verification front. And so are there solutions? You have to look at your pain points, and you have to look at, where are my costs today? And are there things that this new provider can bring to me to help me reduce those costs? So I think it's twofold. Looking, do I have the solution that allows me to be competitive in the future, a la the digital solution that the next generations want, and how do I reduce the cost today? And I think everybody here saw the most recent cost. It's north of $11,000 alone, which is unbelievable if you think about it. For those of us that have been around this long, those numbers just continue to creep up. But we have to look at that. And Chuck talked about this, because I've used that analogy of you just need one more loan, from each loan officer, and that would be great in theory. But I also think you have to look at the efficiencies for the loan officer? Will this technology allow them to be out there, networking and building relationships instead of working on loans? Meaning, how much of their process can be automated? And those are some of the things that I think that we really have to look at is cost. Do I have the solution, and how much can be automated of the process to maybe they're not getting one more loan, but maybe they are getting those loans, closed faster, because again, the reduction in days on a loan may not help the loan officer per se, but it does help your operational costs. So, just a couple thoughts there on top of what Chuck.
Yeah. And Dan, just on that too, we have to look at the customer experience, and you talked about the consumer's customer experience, but the loan officers are our customers as well too, right? And there's so much optionality and choice, whether, in the broker model of selecting a different wholesaler or retail and making moves, so that is if you're not retaining your folks, then you're losing revenue too. So the customer experience has to be thought through, like you're saying.
Well, yeah, I think, you guys are both making great points. It's always tough sort of answering third after two very eloquent and complete answers. But I'm going to focus on one part of Keith's original question was, is it just hype? And I think hype is a very relative thing. I think that it requires that lenders really look at their own goals, their own processes, and decide sort of what fits for them, and maybe that there's some lenders for whom having the greatest whiz bang AI thingamabob doesn't really work in their environment. And in fact, the inclusion of that kind of technology gives them a step backwards, not because the technology is bad, but because it's alien to the way they do business, or the way they want to do business. I should make sure to caveat that in the terms of the future as well as the present. On the other hand, all of the points about efficiency and customer satisfaction, and those customers are both the revenue generating part of your operation, in addition to the borrowers themselves or the prospective borrowers. All of that's true, and it gets to be a pretty complicated equation. And I think that one of the things that people miss when they're asking, does this really add value, is a deep interrogation of the kind of shop they are and or want to be, and how that fit happens. Because it's not true that every technology is good or every technology is bad, right? It really is a matter of, there are such a large number of lenders, and they each have their own way of doing things. And it's how that technology fits into the way they do things that will really drive whether they can get the benefits or not.
And Andrew, I think Andrew, Dan, and Chuck, you're all tying back to peeling this onion back just a little bit deeper, tying back to a point you made last week, Chuck. And so I don't want to steal your thunder, because I think it is part of the answer to your next question. But part of our responsibility in selecting technology, this is one of the key points I'm hearing. If you're a lender, you have a responsibility to not just be sold a technology, but actually to be a partner in that sales process, to be transparent, to your point, Dan, about, hey, here's my loan process. Let's talk through it. Now let's talk through your technology, and let's talk through where you anticipate we can potentially get some pickups and efficiencies and get some ROI and reduce some costs and get a faster pull through on our loans. So it comes back to, Chuck, your brilliant point last week is you have a responsibility to be a good partner when it comes to helping answer any of these critical questions around, am I going to lower costs? Am I, is technology really going to drive down my costs? Is cost something I should be focused on, or just continue passing on the cost to the borrower, which could be your competitive differentiator, because you're actually lowering your cost to produce on a loan versus a competitor who just keeps passing on these exorbitant technology costs. So again, part of that point is you're needing to be a good partner as a lender in helping work through that sales process of this technology that seems to be a shiny new object. Did I capture that right? Did I put that in the right perspective, Chuck?
Yeah, I think so. And, I'll probably comment a little bit more on it as we go forward.
Sure. Okay, well, good stuff. Good comments here. So, we'll go ahead and jump into that next question. So, our industry is littered with failed IT projects. I mentioned 70% at the opening of the call. They're either over budget, they're missed deadlines, and or just even never completed. And we've had to go in and try and clean up that mess many times. So, how does technology selection influence the project's success? How can a lender choose among all the many competing offerings between these different systems? Are there key skills that a lender must really have in-house to deliver a successful project? So, Andrew, why don't we start with you, just based on your broader experience of all the different lenders that you've worked with over the last 20 years?
Sure. Well, thank you. So to me, it is the key question, because the end of the goal is not just to purchase the technology, it's to actually make use of it, right, to some positive benefit. So to begin with, I think the notion of sort of starting from the end and working back as part of the selection question is important. Understanding what needs to be done to have something implemented is very important. It is always the vendor's role to accentuate their positive, and that's not about not telling the truth or anything, but that's their goal. And I think that's what you want vendors to do for you, is to really understand where their strengths are. But as a lender, you need to take a considered eye to how what their strengths are play into what your strengths need to be as a lender. And really getting back to what I was saying before about that fit, that match, is pretty critical in this process. I think in terms of the skills that you have to have, there are a couple of different sort of classes of things. There's certainly some lenders who want to take on these projects pretty much independently, in which case they need a huge set of different skills, from the pure technology side to the project management side, to the sort of understanding on the business part side, right? Which is very difficult to take people off the line to say, here, come help me implement this technology, when you really want them to be producing revenue or doing underwriting or whatever the task might be. So you need all three of those to come together. Obviously, there are lots of people, Blackfin is leading among them, who can help with those kinds of implementations. But even then, you need the skill of project management and the skill of how to oversee these kinds of projects, to know that the vendor and the consultants are on track. It's not something you can totally wash your hands of. I think the one thing that I would say, you just need to consistently be careful about, is the notion of, oh, it will be easy. Because there is a cultural change that's required for bringing almost any new technology in. You're asking people to go through a change management process, and recognizing the change management skill set and what's required. From a small shop to a huge shop, you're going to have to get a variety of people who may not all come from the same perspective to change what they're doing, and that takes some skill all by itself.
Yeah, no doubt. Really good points, Andrew. And just harkening back to a couple of different projects where organizations, they underestimated the impact of the change to their people, because they tend to think that we're just replacing this small little piece of our technology stack, or we're replacing the old with new, so that we have more feature functionality. But there's always these other handoffs in the loan process that people aren't aware of, and they're now concerned for their job. And so all those things need to be thought out and mapped out well ahead of starting to kick off implementation and project management, because as soon as they see that a new technology vendor is coming, everybody runs for the hills and gets scared. So
and it's factored into the technology selection as well. It's not just after you select, you have to go all the way back to the beginning, in my view.
Spot on. Well said. Well, Chuck, do you want to expand on your thoughts on this question?
Yeah, it's one of my favorite parts of the conversation because, you know, I hear lenders complain about technology partners like I hear loan officers complaining about realtors, you know, and it doesn't make sense because we all need each other in both cases, you know, so you just have to really look in the mirror, I think, on this. And certainly, you know, as Dan was talking, I was like thinking, or I'm sorry, it was Andrew's comments, buyer beware. You really have to be a savvy buyer in this. And, you know, my wife and I are watching 1883 right now. So if you're Yellowstone fans out there, it was,
Oh yeah,
you know, this pioneer journey across from Texas, you know, and, you know, really the start of, I look at this as a journey like that. And so the selection of your technology partner, is like having the appropriate compass heading on your journey. If it's off at the start, you're never going to get back on course. You just, you know, you fundamentally are going down the wrong track. And so depending on the size, scope, and relevance of that technology, you know, you have to gear up even more. And I think there's so much to think about it and all that beyond execution. Counterparty risk, obviously, you know, we have a very cyclical nature. Are you going to bet the farm on a new company that may not have the backing or have the experience with it? Integrations are super important, right? And not to be underestimated. You know, I came from a firm where we had our own LOS technology. And it's a tall order because every time you want to do something, you have to create your own integration, whereas, you know, integrations are more standard for other products out there. So there's just a lot that goes into that whole thing. But that upfront selection is so important. And as part of that, you have to really understand the journey you're making, like those pioneers. Okay, so you need resources and a commitment to the process, you know. And when you're looking at technology implementations, there's kind of two, and I'm very conceptual, so these are kind of high level tracks really. One is the users have to use the technology, right? But there's still a change management part of that. Are they all going to revolt? Or are they, you know, what's it going to take for them to get there? You know, I mean, have you really, you know, vetted it all the way through and understanding the impacts? And certainly then there's the ones where it's a more optional usage, and then you got to drive adoption of that technology, especially with your sales force. And, you know, if you manage loan officers, you know, there's not really much mandatory adoption. You've got, it's all carrot, you know, it's not much stick. And so you just have to really, really underestimate, or not underestimate what it takes to get the perceived benefits that you and your technology partner are doing your very best to get. And I'll just, a very quick story. One of my first learnings on change management, I had this small team, small wholesale branch, about 12 people. And as a team, we decided to adopt conversation logs. Our system had conversation logs, and that's how we were all going to stay congruent with what's happening. And so we made that commitment and we reported on it every week. And it took a full 6 months to get, you know, pretty high levels of adoption. And it was a full year before we were really consistent in updating con logs. And you know, that's a fairly easy project, but it just shows you, even with good intentions and everybody's buy-in, how hard habit changes are. And so I think you just have to really, really think through, you know, all those different things. And the last piece I'd say, you know, we talk about bias because there's bias all through the chain. And so that is when, you know, a consultant, you know, such as, you know, the tech navigator, you know, that could come in very, very helpful to help you vet these things and to ask questions that you're not even cognizant you should be asking in some cases, and to uncover some of the bias, and then to make you think through what you have to do to fully realize the benefits of this initiative.
That's a really good point. Thank you, Chuck. And, you know, I love your analogy around 1883 because, you know, you're going to mention that, but as I watched it a couple of weeks ago, just to catch up on some binge watching I hadn't caught up on. It gets a little cold here in Denver, so sometimes we're forced indoors. But as I watched 1883 and they're getting ready for their big journey, I nerded out on all the project management and program management that went into that ahead of time before they even left Texas. So I completely agree with that analogy. I think it was great. And then all along the journey, what they have to do, they had to have massive agility as they came under attack and had so many challenges, internally, externally. It's no different than a selection and implementation project. I mean, it's a journey. I think you're spot on with that analogy. Good points. I like it.
Yeah. Well, if I might say, that word you just said, just agility, because it's not going to come out the way you thought it. It will not, the journey will not be what you thought. I think everyone can say that. I'm sure there's milestones that maybe are consistent, but it won't be. So just expect that. And then, adapt.
Yeah.
Yeah, if I can interject a small point, I worked for a guy at Fannie Mae who used to talk about the need for not fault tolerant computing, but fault tolerant management, because we're always going to make some mistakes, and it's how quickly you respond to those mistakes and get back on course that counts. So just to your point, Chuck.
Amen. Good point. Dan, now you have amazing perspective because you've been on, again, both the lender and the vendor side. So right. How are you helping negotiate those challenges and implementations and kind of that selection process and helping them map out mentally how successfully we can be with this implementation?
Yeah, great question. And you all touched on how critical the selection process is. So let's assume you've selected. What are your expected outcomes? Right? You've just chosen this great technology. What are you expecting to get out of it? And make sure that you have that listed out, that I expect to improve this by 25%, or I expect to do this, or I expect the loan officer's role to change in this particular way. And then, let's talk about the implementation. You have to have, you talked about project management. You have to have a leader of this initiative, but you also need the functional stakeholders involved as well. Because if they're not involved in the choice of the technology, that's a fail, right? And oftentimes it may just be the IT person, the operations person. They didn't include sales, and then obviously sales. To Chuck's point, it's all about carrots. So like, this doesn't work the way I want it to work. I want the old thing. Bring me back to that. So you have to have the stakeholders involved. But once you do that, and Keith, you touched on it early in this question, is understand the time frame that the vendor expects you to implement. What are they telling you it should be? And quite frankly, check with others who not implemented it but are in the middle of implementation to see what that time frame really is. Because they may tell you, hey, you're rolling out in 6 weeks, and the reality is others in the marketplace, that 6 weeks is now 6 months.
This is hilarious you're touching on this, because I was helping a large regional bank actually select and implement technology, and we were going through the RFP, the traditional RFP, long process that was certainly outdated. And we were asking the vendor, and they were in the conference room, and we were all sitting around, and I was like, so how long does it take to, and I purposely queued up the question this way, and the vendors, I said, how long does it take to implement your technology? And they said, well, with an organization of this size, a large regional lender, it's going to take us anywhere from 6 to 9 months. And I go, okay, hold on. Is that your out of the box platform? Oh yeah. Okay. Well, we're a regional bank. We have a lot of unique integrations and whatnot. So how much longer is that going to take? Then they were like back on their heels, because they're like, oh my gosh, I need to be more truthful about and transparent that I have a lot of wonky, integrations, and it's probably going to take us another 3 to 4 months. So realistically, you got to make sure you take it a step further. Is that 6 months for your out of the box, off the shelf platform, right, and not including the integrations that Chuck mentioned earlier? So sorry to cut you off, Dan, but I think you're hitting on something that's really important as far as that question goes.
And it truly is. And like I said, if you ask folks who are in the middle of that, and they can give you a true answer, because again, and I'm not speaking from the vendor side, I'm speaking from the lender side. Don't just take their word for it. There should be documentation that shows these steps, and there's folks that do that. They have the steps outlined saying, if you do this, we will go live by this date. And oftentimes it falls on the lender's participation to make sure, right? Because the longest period of time is configuration of the system to meet the needs of your process. But to your point, that is so important to ask that question, to have a true understanding, because oftentimes you're going from one system to another. So what is that transition period going to be that I'm working in two systems? And oh, by the way, I have, I'm reporting HMDA data from one system, I'm reporting MERS over here. I mean, at what point in time am I on one singular system, moving forward? So I think there's a number of factors that you need to look at. But going back to my original comment, and and my answer is what are your expectations? What are you expecting to get out of this, regardless of what that tech piece is? And then the last piece is how do they work together? You just chose this technology. How well does it work with the other tech pieces that you have?
Really good points. Really good points. And as you're talking, Dan, there's another thing that I have fun with when it comes to helping lenders with selecting their technology. And believe me, I've been on the vendor side. So we have a lot of vendors on the call today, and I love our vendors. I love our preferred partners. I'm huge advocates of them, but there's something that gets lost in the interpretation and in the sales process. And I always try to have a little bit of levity to bring it back to reality around, what we're saying versus what the reality is. And one of those questions that I'd always expand on is, you just told me what your system can do. And with enough time and money, your system can do anything. But what has your system done? Have you done this integration? There's a difference between can you do this integration and have you done this specific integration? Big difference in dollars and cents and time, right, Chuck? I mean,
yep.
There's a big difference there that folks need to be sensitive to. Yeah.
And I think, you have to use your own kind of experiences and common sense on it. We had a partner that had really acquired 3 different companies and was integrating 3 different pieces of what was a kind of a part of the overall front end chain. And it sounded great, right? Because you got these 3 things coming together, but, and it failed, by the way, after many months and like a whole, it was a whole thing. So, right. So, but if I, looking back at what I should have known is like, 3 companies coming together and integrating their technology together. You have cultural changes, you have technology challenges, and of course they're not saying that to us, but, in hindsight, I could have probably discerned that a little bit better. So
yeah, there's, and everybody's fighting for the win, right? I mean, I get that, and I understand that, hey, all our LOs, they need this new point of sale, they need this new, CRM, they need this new marketing technology integrated. I get that, and the value that that's going to ultimately bring, but I think going back to your point of, we just need to be an honest partner. We can't just be holding the vendor liable. We need to be really an honest partner in ourselves and owning and communicating internally and setting the proper expectations from a budgetary standpoint and timeline standpoint, instead of trying to sell it upstream to the C-level to get the budget approval, right? I mean, we kind of can become our worst enemy as a lender in that regard too.
Yep.
Andrew, any additional thoughts on that?
No, I think, what everyone's saying is spot on. The only thing I might add that, it's easy to look at the technical side of integration. You also have to look at the business side of integration. So if I'm doing something up at the front end, what does that do to the folks in the back end? Just as an oversimplified example. And sometimes that's pretty tricky to do. Yeah,
no doubt about it. Good point. Well, I'm being sensitive to our time. We got about 10 minutes left. So I guess we'll kind of just ask a lightning round of, buttoning up from each of your perspectives. What are the 3 biggest prescriptive, mistakes that lenders make when it comes to selecting technology? What would you say are the 3 key things that lenders really need to focus on before they step out the gate and start looking at technology? Kind of
You want me to
Go
start?
ahead. Yeah.
Okay, perfect. First and foremost, not looking at the future, not looking at scalability. Don't look at your business model today. Where do you plan to go, in 3 to 5 to 10 years? And will that solution meet your needs? So that's a key one. I already kind of mentioned this, but not defining the requirements, not defining, what the needs are to meet this. And last but not least, not understanding the true cost. It is not about just, hey, there's a cost for implementation. Are you paying a subscription fee? Are you paying a per loan fee? Understanding that cost, having a variable cost, which some folks do, that could be a tough one in a robust market, which we just came out of. Having a set cost, you can manage your P&L. You have fixed costs, you know what that's going to be in the future. So lightning round, those are my top three.
Awesome, Dan. Great. Thank you. Andrew, Chuck?
All right, so I think I'm up next, so I'll give three. So the first one is, it's an ecosystem. Every spot solution actually affects everything else in the world that we live in. So look at it across the board. The second point is it's about fit and how that fits into your culture. So you can also put this under the heading of overall change management. Technology can be used as a way to change the culture, but you need to make sure you're not getting so far out ahead of the culture that the technology gets rejected like a foreign organ. And then I think the third piece is that it's about partnership with your vendors. You need to know that they're going to be for you, be with you in the way you want them to be. And if you have a highly competent technology shop, et cetera, you may just need them to deliver the best and brightest when they can. Or you might need a lot more hand-holding and a lot more support as you go. And so it's not a one-size-fits-all, but you want to make sure that the vendor and you as a lender are on the same page in terms of that level of expectation.
Excellent. Well said, Andrew. Chuck?
Okay, be a little redundant, but do your homework. Think and go the long route on selection, including evaluating what it takes to be successful as a lender partner. Be clear on the outcomes desired and what you think you're going to get, and think them through from what you and your technology partner have to achieve for that success. Be a mature partner, really be pragmatic and look at this whole thing. But, doing your homework, I think also is, it's so far encompassing, but a lot of it, like you guys were talking about, references, recent implementations, integrations you have, not you can build, all those different things. Obviously, their customer base, their longevity, capital base, all those different things. There's so much into it. And then the last is understand and realize, even with thought like the pioneers, you're probably underestimating what it takes to get not just to the finish line, but the ultimate finish line of adoption and reaping the benefits of what you achieved. So just, whatever you think it's going to take, it's going to be harder, and just gear up for that.
Fantastic. Another brilliant points, guys. I'm really excited about this conversation that we just had.
So one question is, can we provide some specific examples of an operational gap that was identified during a system conversation, and what steps need to be taken to resolve it? So some sort of specific examples. I certainly have a bunch, but I don't know, Chuck, maybe we should start with you.
I mean, the only one that comes to mind, this shows you how kind of minute. So great technology partner, well vetted, lots and lots of smart people. The challenge became one of the people that they deployed. They had a little bit of turnover in one segment of a very large organization, but that person was key to our partnership and implementation. And, it took a while to identify that was one of the gaps, and then for that to be resolved by replacing that individual. So, it's just like one of the little things. And again, this is an organization that I reference all the time and I think highly of, but some things are out of their control too on the people side of it.
Chuck, that's a really good point, because it comes back to that risk management. Do you have a plan for risk management? What's the risk related to this project, and then monitoring those risks to make sure that they're managed correctly? It's a really good point.
Well, and to add to that, we didn't touch on this, but what kind of support are they giving you? Right? Because ongoing support, ongoing management, ongoing dialogue is so important. And that's a question that has to be asked. So, I appreciate you mentioning that.
That's good.
So another question that came in, I think is a pretty important one. So someone's asking about thoughts on when to reinvest in a new technology or reinvest in your current technology versus moving to a new technology that fills the same role. So how should one think about that problem? If you guys don't mind, I'm gonna start in on this one. Love your perspective.
Yeah, go for it.
But I think that there clearly it's a bigger hill to climb to bring in a whole new technology, even one that fits the same sort of basic role. And so you really need to drive into why are you doing it? What are the key things? We've certainly seen at Blackfin cases where people weren't using their current technology thoroughly. And so in fact, their current technology filled the needs that they had. They just didn't know about it. And what they needed was more about sort of some process change and things like that. But I think that in a world that's so fast moving, the mortgage technology world, there is a case to be made that you want to be able to start with things that are newer and fresher every once in a while, not every year, not every 6 months, but maybe every 5 years or 7 years. So you need to look at both sides of it. And again, just sort of repeating myself over and over, as I like to say, it's what's the fit with where your organization wants to be? Are you happy with your process? Is it where you want it to be? Does the technology do mostly what you want, but just needs a few tweaks? Versus, you know what, now's the time to really step up to the fact, as Dan mentioned early on, that there are a lot more first-time home buyers, younger home buyers who really want this, the Amazon.com style mortgage. Are we prepared for that kind of customer base? And that's a business decision that needs to be really thought through. Clearly, if you're moving that way to the fully digital mortgage, you're probably, you may not want to use a legacy platform that doesn't fully support that. But again, it's about the fit to the business.
Well said.
I just say that anytime it's a replace type of a decision, that keep and optimize should be one of the evaluation points that you do, and you just stack that right up with the other vendors that you're looking at. And if you think about it, it's going to be a lot of investment of human capital, blood, sweat, and tears, as well as money. So if you were to take a commensurate amount of effort on your existing technology maybe with your partner and with process change and all those things, are you better off with that keep strategy? Because that would be part of it. So I'd say that always needs to be an option on the replace side of it.
Totally agree.
Yeah, we're doing feature audits with our clients, to your point, Andrew, to saying, hey, here's the things you're not using. And by the way, you should, because so often folks either aren't using it or aren't using the technology to the fullest extent that they should.
It is a tricky balance, though, because most of the technologies in the mortgage industry were really, invented and propagated 20, 25 years ago. Some have undergone some more fundamental change and others have not. They've put sort of nice veneers on fundamentally older processes. And again, doesn't mean that older process is bad. It's really about matching to what the lender wants to do. But it certainly, there are opportunities to make stepwise changes by picking a new technology. But I absolutely positively reinforce what Chuck just said about putting up your current platform and its pieces against the new ones to really see how that fits for where you are.
Hidden part in all of that, Andrew, was we found with clients who they get this, wow, the feature functionality of this platform is going to outweigh the 20-year-old LOS that we're on. But what they don't realize is we're a small community bank and we don't actually have the infrastructure to do the management maintenance of this platform. in order to really benefit from the features and functions. And they don't realize that until well after the contract is signed. And now they're like, oh my gosh, I need a whole staff of people, or I need to outsource this to somebody to help that. So not just stacking up the feature functionality and technology side by side, but what are also the post-management and maintenance requirements? Chuck, Dan, Andrew, can't thank you guys enough for being on today's call. Really excited about the conversation and really helping, just bring more value to our listeners, and hopefully they get one or two, bullets that they can walk away from and really make some meaningful decisions around their technology and in the year ahead. So thanks, guys. And thank you all for being on today's call. We wish you the best and keep us posted how we can help.